All right, good morning, everybody. Let's do the recap today. We got a really nice trade on Tesla, and the goal is to do a recap. So today was a fairly good day. I had one loss on Meta. So on the damn it, Meta is running up. Damn it. Yeah. So Meta on this pop up. So Meta was really strong at the open, went up, it came back up, and this consolidation, I tried to go long Meta with the call at 179, 180. I don't think he had 179. At 180, I was hoping to get this pop, and it just dropped on me, and my calls lost value when I got stopped out on it on the option. That was a fairly big loss on that. Let me see if I can bring the chart on that on the Meta. Yeah, here it's here. Let me bring it here. So that was a call that I got at 180, and I was hoping that this consolidation is gonna go up. I bought it at 4, and it dropped on me at 340. So that was a heavy loss on that, and it did eventually bounce back, as you see. It did eventually bounce back, like kind of 2-minute chart. It went up to, and right now it's trading at 5. But again, that drop, you don't know really what you can do. So that was a really bad loss on that. I really shouldn't have messed around with it. But you never know. Your market is traded really choppy at the open. And then Tesla was another trade that we had. Tesla at around 189 had huge support here, and it did bounce, squeeze back up right at around 944. I went long, went up, added more above the VWAP, and I was hoping to get the move up through these levels. Unfortunately, it didn't really pop up, and I got, when it dropped the VWAP, I got stopped out. And then it came down around 189 again, and I saw that this 189 could be potentially as a support, because a couple of times we bounced back. Still, we had also this quick bounce from it. I went long again at 188.50, and I was really patient, and I was hoping to get at least around to the VWAP for the first target, because now my stop loss was down somewhere around below the low of the day, around the low of the day, 188. So I thought that if I'm going to give $1 loss on it, then I need to at least get $1 on that for the first partial. So I held it for about 10-15 minutes. That's a usually very long time for me personally. It came back up. I scaled out near the VWAP. In this pullback to the VWAP, I added more again, heavy size, and then we went all the way up to 196. So that was a very nice trade on that. You could trade it with call option. We had traders in the community that traded with call options too. You could buy call at 188, 189, 190. It would have been a very massive move on that gap. So that was it. So essentially entry, a re-entry at the VWAP, and this is the lightning bolt pattern that Peter is trading it, and I slowly scaled out on it, and eventually it turned out to be a very profitable trade for me. I still have 50 shares left, so it turned out to be a very profitable trade. But the issue here was that I had a loss on Meta, and then I gained the profit back on Tesla, and I made about $4,000, $5,000 in there. But the issue that we discussed today is trading on a large account and a small account. So my account is about 2.5 million. And I get a portfolio margin of almost $10 million buying power, and it's getting very difficult to get that 1% target on a bigger accounts. For a $2 million account, you need $20,000 a day to get to that 1%. And it's really hard and difficult to get into that level. First of all, the market doesn't have liquidity. You have to go very large share size. If you want to go large share size, you have to trade very liquid stocks like Tesla or higher price stocks, and not all of them. Like Tesla, that's why I love trading Tesla, because it's a higher price and very high liquidity and high order flow. But Brian was trading Lee today. It was a really nice move up, but it just doesn't have volume. Look at the time and sells, doesn't move at all, and that bothers me. Especially large share size traders like me, having hard time trading these stocks that really doesn't move. So if you're trading in a big account, the 1% target can be very difficult. Like today, for example, for me, $4,000 on that account is only 0.5%, even less of 0.5%, it's 0.2%, which is not bad, but it's just very difficult to get to that target of trading. But if you have a smaller share account size, the 1% is getting more reasonable, because you don't need a huge size or huge liquidity. Sometimes with a small move on the low liquidity stocks, you can also get that. And that's why, essentially, a lot of people are saying to me that if day trading is really possible with 1%, why Warren Buffett doesn't do day trading and gets $1, 1% every day? Well, the answer to that is those guys are first of all managing billions of dollars, hundreds of billions of dollars, and second of all is they have mandate. They can't just do day trading on that. They have to stick to the mandate of their funds. Plus they do. It's not that they don't. Like for example, Warren Buffett is the biggest put sellers on the S&P 500. So he's just market making on the SPY, just selling puts, selling options with the extra cash that he has, and which is very, very, very big. Ardi and I were looking at the filings. He's one of the biggest market makers on options on SPY. So essentially, actively trading the options for S&P 500 because they just have huge amount of idle cash. So yeah, that's why day trading is good for a small amount of accounts, but when your account's getting significantly bigger, you need to have the better exposure to the market overall to have that risk-adjusted premium that you're getting. Brian, sorry, I cut you off.
Yeah, no, I was just saying he's hedging a lot of his positions by selling. He has positions and then he hedges or uses options to ensure he doesn't see significant losses as well. So yeah, anyway, it's interesting that he's so active.
Yeah,
if you look at it, that's a good thing.
Yeah, it's a good thing because obviously, so what he does is, they have a lot of cash. They don't want to just leave the cash. So what they do is they sell the premium puts. They worst case scenario, they buy the S&P 500 SPY. So Akshit is asking why selling calls and puts. So when you're selling the options, the time becomes in your favor. So because the time, essentially options are based on the volatility and time. So when you're selling them, you're shorting volatility and time. And as the time goes, pass by, your value of the call option is going to go lower and lower, just because they have this time decay. That by selling them, if you get into the choppy price action, it's actually in your favor because the value goes down and you're short on them. But if you buy them, if you get into the choppy range, then you have the problem of time decay against you. All right. So Derek is asking, would it be a significant downside for you to cut your day trading account? And that's exactly what I did last year, and it turned out to be a really bad trade for me. So yeah, essentially, when your account is too big, you have to have that, put your things in different accounts and different positions to get that exposure. Right now, at 5% interest rate, you can buy just treasuries and get 5% return a year, which is really good. Last year wasn't like that. Last year when I bought those TNA, I thought that the interest rate were almost zero, so you really had to put your money somewhere. I made a mistake on that, but overall, what you can do is you can, for example, buy SHY. I bought some SHY here, SHY. They are treasuries. They're really trading at around $81. They have no volatility, essentially no volatility, very, very little volatility, but they give you 5% return. And if there is something really good trading opportunity comes in, you can just sell them and then buy whatever that you want. It's better to leave it at the cash because you get 5%. So for those traders that have a really big account, you don't want to trade like with all of the accounts. Just buy SHY, get 5% return. Because they are 1 to 3 year treasuries, and whenever you want to take a position, a really good opportunity came in, you can just sell these ones and take that trade. So Tesla really went up, very, very nice move up, and I don't expect it to drop below the VWAP, but I don't also expect it to go significantly higher either. All right, Brian, anything from you? I know you shorted Tesla at the open for 1 minute open range breakdown. I remember that.
Yeah, I was just saying, I know you made money long, I made money short. I mean, that's the great thing about Tesla. It's such a great trading stock. So it dropped right at the open. As soon as it lost sort of the opening range, I shorted it. And then it came up to the VWAP, bounced back up and then kind of rejected. And I shorted it again when it started to drop below the low of the day, and covered it again at 188. So I had two really nice short trades on it, which is a great thing about trading. You can make money in both directions.
Perfect. Yeah. So thank you so much for that. Another thing that I just want to mention that about the risk to reward is that if this is your risk, the first target should be at least the amount of the risk that you're taking. If you don't, over long term, guys, you're gonna get into trouble because you partial too early, and then your risk to reward is always skewed in, toward the low side. So you want 2-to-1, 3-to-1 risk to reward. Like today, accuracy of my trade was 50%. I had one loss on Tesla and I had one win on Tesla. And I can make money if it's 1-to-1. Then at the end of the day, I'm losing money based on the commission. But if I am taking 2-to-1, 3-to-1 risk to reward, then it's over long term is going to be it's going to be better. All right, guys, thank you so much. And yeah, looking forward to see you San Diego, guys. Again, San Diego in 2 weeks, almost 3 weeks. So I hope that you come. I think we have about 60-70 people. That would be really nice. That would be a really good gathering together. If anyone can make it from out of town or from out of Southern California, that would be also really nice. I know people coming all from Dubai to this, so that would be very exciting to see you guys. And thanks for the support. By coming, you also support our event as well. Perfect. Okay, ciao guys. See you tomorrow.